all good. Sometimes YouTube does that to us with our links, but I'm not going to waste any time today. I'm going to jump right in it, and let's do this right here. Everything good? Okay. Share screen, and let's look at this beauty that you guys, I hope you all followed me with as we went through charting this up on the, I believe Thursday, we went over all this. And then you can go to, I love Bloomberg.com. That gives a lot of, and there's no affiliation with that. I enjoy that website. It gives a lot of very wealthy information on gold. A lot of you guys were asking me on Instagram, what causes push? There's a lot of economical, I'll say, crisis. I'll butcher this, like the geographical chaos that's going on right now. We have the Ukraine war. We have China talking about the trade war. This is huge. This is huge for not only the economy, this is huge for the entire world, because when you see gold just pushed an all-new all-time high. So what does that mean? That means that when you see everything panic, gold is the fundamental asset. It is the largest, biggest safe haven of all other things. Gold is the one thing that you can take anywhere. It's the same value. Not like the dollar, not like the pesos. What's up? Yes, I see y'all in the chat. Doing good. Hope you're doing good as well. Thank you so much for talking in the chat, because I love interaction, and I appreciate that, because if not, it's just me sitting here talking to the camera, and it's not that fun, So when I get interaction, I appreciate y'all. So yeah, gold, you already know, is my baby. I love this. I love gold. It is what has created everything for my life, for my future. But you see this, okay, so when we see this massive push like this is a huge candle. You're talking 2075 to all the way up to 2139. Now, I know I'm jumping right into this, and then I go through my thing of, how I identify this, how I mark up my level, stuff like that. But when you see a huge fundamental push with gold, you automatically know that 9 times out of 10, especially with traders, retail traders, if they caught this buy, you're going to have massive orders withdrawing. So if you imagine, like we were explaining this buy all the way down here at this live, I explained to y'all, I feel like gold is going to be testing all the highs and breaking an all-time high. And look, we see slaughtered this high, almost all of them, literally destroyed them. So now when you see high, you don't buy at the highs and you don't sell at the lows. You want to try to catch those waves when you're on the pullback. So first thing always, we identify the trend. Once we have the trend identified, depending on what time frame you want to base your trades off of, you already have your game plan. Meaning, when you're going into that trade, you already know what you're going to be risking. You're not looking at the trade and say, you know what, I'm not feeling well about this. I'm going to change my plan. I'm going to change my risk management. I'm going to blow my account. You don't do that. The whole purpose of a plan is when you move forward, you already have the guesstimations. I'll use that word. Sorry, my phone's going crazy. You're already prepared going into that trade mentally of what you want to do, what you're willing to risk, and then for the reward, that just depends on how long you want to hold. One thing that I noticed with a lot of y'all that y'all message me, and the first thing I always ask you guys is send me the history of your trading account, because I can tell. I don't need to hear nothing from you. I can look at your trades and tell exactly what kind of trader you are, whether you're a FOMO and all that stuff. 9 times out of 10, what I see is you guys will hold a trade all the way to your stop loss. You'll hold a trade for 7 hours and draw down, praying to God that it'll turn around, this and other. As soon as your trade goes 5 pips in profit, you close it because you can't handle it anymore. That is absolute insanity to me. Like, you can handle all the chaos, but you can't handle the good part of it. And if you want any consistency and sustainability with trading, you've got to flip that mindset completely. You've got to get out of the, oh, I can handle 80 pips of drawdown, but I can only handle 10 pips of profit. Just say that to yourself and see if that makes any sense. So this is why I swing trade. 40 pip stops, at least 200 to 300 pip reward. Now in that trade, I scale in. I have my levels set in play. And every little pullback I see, I don't care if I go 10 or 15 pips in drawdown, as long as my trade doesn't equal all the or retrace all the way back down to my entry. If it does that, I normally get out of the trade, because then I'm like, okay, the trend could be changing, something's going on, and I don't want to deal with the headache. But with that, I always try to explain this. If I'm in an original buy and I'm using a one lot, and then the trade goes up 40 to 50 pips and I'm looking for a place to scale in, my original entry is a one lot, then my scale in entry is going to be like a 0.5, half my entry. That way it can handle some drawdown and doesn't eat up my profit. That's where a lot of you guys are failing, is you get excited with the trade, it's in your direction, you're up a few pips, and you just ball out. You go straight gamble mode and you're dropping a 5 lot where your original entry was like a 0.5. You got to be cautious with that, especially if you're trading with Surge Trader account. Surge has rules set in play for that reason. It's not to be against you, it's to condition you and create a better trader for you. That's why parameters are in play. You already know, if you have a funded account, you can only have this amount of daily drawdown. You can only have this amount of daily loss. So that is kind of like, they're almost helping you create the trading plan, but it's up to you to stick to it. A lot of you guys will fail or blow an account, and you'll want to blame Surge or whoever, or whatever prop firm, whether it's, even if you're a live account with your full funds, you'll want to blame the brokerage because of your mistakes. And that's just, it's not how it works. Always go into trading with a trading plan. You're not going to be right every day. That's okay. I have losses all the time. All the time. You just got to understand the highs and lows, push through it. And if you've got your trading plan, the best thing is, you can, day by day, you can always tweak it. You can always get a little bit better. You can always get a little bit better on your entries, a little bit better on holding your trades, a little bit better on your stop losses and stuff like that. It's not going to be an overnight thing, obviously. I've been trading 8 years. I still fail. But what pushes me is, I always think, what if I would have quit? It's like, for me right now, I'm struggling with the gym. I know the results. I used to work out for 10 years solid. I know what can happen. But the consistency of me going in the gym is what's not getting me the results I want. Apply that to your trading. I understand that if I go to the gym Monday through Friday and I keep a set plan, and I stick my plan with my eating, I know the results are coming. There's going to be days where I don't feel like working out. There's going to be days where I go to the gym and I just feel like crap. It's the same. I apply this to the charts. There's days where I get in the market, I'm looking at gold, and I'm like, I don't know what's going on. I have no idea. And you know what I do? I just don't trade. There's nothing wrong with that. It's like, a lot of y'all have the mindset of a day trader means you trade every single day. That is the Instagram fluff of trading, and I hate it. You think in order to be a successful day trader, you got to make $1 million overnight. Wrong. 90% of the United States income is not $300 a day. You know how I can on accident make $300 a day on my trading account, literally. But you guys don't understand compounding. $300 a day, what that equals out through the month, and now you're making an extra $6-7 grand a month, tripling your daily income. Not worrying, not stressing about your financials, not stressing about your day job, because I can promise you this, even when I worked at the railroad, when I started trading and I was making like $4 or $5 grand, I started loving my job. Most of us hate our 9 to 5 because we have to be there. That was the whole point of me trading, was to get to that next step and to remove that emotion of, I hate my job, because I was a 6th generation railroad of my family. It was what I always wanted to do. But then when I started doing it, I loved working. I loved being a mechanic. I just hated the chaos of supervision and having a boss and this and another. Once I started making it a side income off trading, literally playing on my phone, on the toilet, literally, that's what I was doing, hiding in the bathrooms, trading, or hiding in a locomotive. It completely changed my mindset on everything. It's not like I have to come to work, but now I want to come to work. Not only do I want to come to work, I want to share this beautiful feeling that I have with my coworkers. Same with anything and everything. So I know I kind of went on a little sideways with that, but the biggest thing is your mindset, shifting your mindset into why am I doing this? And then once you understand that, obviously it's to make money. Trading, make money. You want the car, you want to provide for your family, you want this, that, and other. We all have our whys. Doesn't matter. But you're not going to get, some of you might get lucky. Yes, you'll flip accounts, you do all that stupid stuff. I did it too. But when you get serious is when you create the plan and then you execute. That's when your trading completely shifts. Because then you already know, okay, I'm allowing myself, I've got this amount of losses. Once I hit this amount of losses, when am I going to pull back? When am I going to stop trading? Okay, I've got a plan where if I'm trading 3 trades a day and 2 of those trades are bad, done. I'm done. I'm not taking that 3rd trade. I'm not going to revenge trade because you're automatically, emotions are full blast. You're automatically wanting to, first thing, biggest mistake is you want to recover your losses. There's no such thing. You don't recover your losses. You just keep pushing forward. You look for the next trade. I'm reading y'all's comments real quick. I appreciate that. So, all right, that's enough of, I try to do my little inspirational talks with y'all. Now let's get serious and let's get into trade. Let me find a clean chart so we can just, that's the one I marked up for y'all. Here we go. Oh, wait, no. I'll just reset this. Remove drawings. And if y'all have any questions, whoever's in here, I don't know how many viewers are in here, blow up the chat. I appreciate it. So, as always, I'm going to just break down the technical side of it. Now, before I do this, I'm going to stop sharing, and I'm going to do stop, and then start screen, forexfactory.com. So, forexfactory.com is basically the fundamental calendar. I am not a fundamental trader, but I highly, highly, highly advise you guys to always at least check it. At least check it on Sundays or Mondays. Look at what time, say, okay, if in your trading plan, if you're trading at 12 p.m., you only trade at lunchtime, like it's 11:45. If you like to trade mid-New York session, check around on the news. Like this morning, we had the PMI, we had the JOLTS jobs opening. Now, all you have to do literally, like if you're using Forex Factory, click on the open detail just to figure out what it is. Why do we care? It's a release date, but can impact the market because job openings are a leading indicator of overall employment. Sounds pretty important. So this measures the number of job openings during the reported month. That is very important. So if it's important news, it's 9 times out of 10, the probability is going to affect the US dollar. So any pair you're trading, gold, UJ, and correlating pairs like GJ, EU, and stuff like that, it's always good to have a little bit of an outlook on the fundamental side. Now, again, I'm a technical trader, but news definitely drives the market. So you got to remember that. Just take a look at it. It's super simple. It takes 5 seconds just to get you a little fundamental game plan going into your trading for the week. Like Wednesday, we have the BOC rate statement. What is that? Okay, so we click our folder. We know that this is the interest rate statement. Highly important. Could greatly affect your trades for the CAD. I only trade the US dollar, so I look for, realistically, I only have the USD. I don't even care about all the other stuff, but that doesn't mean that news like JPY, which is another safe haven for other countries, could potentially affect the US dollar. So just keep that in mind when you are filtering out like Euro, Aussie dollar, stuff like that. I personally, for my trading, I don't look into it. 9 times out of 10, based off my past experience, it does not affect gold. Doesn't mean it doesn't affect the US dollar, but sometimes what fundamentally drives gold, it's kind of like not necessarily correlating, but sometimes there's ones that do and sometimes they don't. So I just don't pay attention to it. 9 times out of 10, I just pay attention to the high impact US dollar. Like tomorrow at 8:15, we have the ADP non-farm employment change. Probably going to be significant for the US dollar. Wouldn't you think? Because of the high impact, it's at the actual greater than forecast is good for the currency, which means it's going to drive the US dollar. Now, if you have been looking at the US dollar, you can tell that the US dollar has been weakening, and they're taking in for interest rates to possibly be dropping. You're seeing gold spike. So there's a lot of just economical things going on that is pushing the market all over the place. If you want my honest opinion, at times like this, especially you see Friday, non-farm payroll, unemployment rate, average hourly earnings. These are huge fundamental drivers. If you want to, it's best, especially like if you've been trading for, let's just say 1 to 2 years, you don't really have that fundamental outlook yet, that experience to trade into the news. You're still kind of just like gambling. I'm sorry, my nose is going crazy. But just stay out of the news at those times, because you have reaction and impulse. The impulse is the very first action of the news. It's when the news hits. What we as retail traders, we drive that. We drive that with our pending orders. That's the impulse. Then you have the reaction. It's best to wait for the reaction. The reaction comes out around maybe like 30 minutes to an hour after the news, and then the flow gets back into order. And that's when you'll see, just saying on gold spiked, and then the reaction comes down. Now it might come back and blast that high, but that impulse just skyrocketed. That's why I say it's best to stay out of the fundamental, that little time block, and then wait for the reaction, and then you can get in and ride that wave. If you're trying to catch the impulse, realistically, you're just gambling. And that's why I am not a big fundamental trader, because when I was scalping, like I was at work and we were flipping accounts on NFP and FOMC. If you guys are long-term traders, you remember NFP used to drive UJ like 500 pips in 2 seconds. I took like 500 to 5K, boom, like that, got out. Now NFP, not saying it doesn't drive it, but it's kind of diluted a little bit, I think, just because of the chaos that we've got going on right now with the war and stuff like this. So not saying it doesn't affect it, but I just want to give you a little fundamental breakdown right there. Let me switch back to this. I don't want to take a lot of y'all's time. I know, I apologize. Let's do this. All right, clean chart. Going on the monthly, I'm gonna do this in 5 minutes just to show y'all. I go to the monthly. You guys know, if you watch my things, you know how I do this. I just try to keep consistency so you can catch it and start recognizing. All right. Go to the higher time frame. I switch to the line chart and I go to my horizontal lines, peaks and valleys. So based off current price action, let's try to find the peaks and valleys just in that area, not way down here, because we're going to just clutter up our charts. Let's do one there, because right now what we're doing is we're creating our supply and demand zones. We're creating our support and resistance, all this stuff. We just don't want to clutter it up. That's good enough for me on the monthly. We have our zones. You can change these colors. You can you can right click on your settings and say, this is my monthly zone. So I know at these points, price is going to react completely against, because 9 times out of 10 on the monthly zones, like if we have a predetermined monthly area of resistance, I know 1000% when price touches it, it's going to completely retrace and not break through it. Might come right back, like what gold's doing, but the first initial reaction is it's going to retrace off of it. Going to the weekly, what do we have? All right, I see a zone here that price just touched. Everything else looks pretty clean. I could put one there, but let's go to a smaller time frame. Let's go to daily, and I bet it'll be a little bit better. What is it? Could potentially put some like right here. Maybe put one right there. And as you can see, these zones are where prices touch multiple times. So let's do one right there. And that realistically is about enough because we're already kind of cluttering up our charts a little bit. Now, some of y'all asked me about trend lines. Trend lines, this is all depending on how you want to look at it. Like, you can do a monthly trend line, but it's not really realistic. But let's just see what it looks like. Let's just do, same thing on the line chart. I would say here, because that's where price tested. And then let's see a bullish trend line. We could do one here. And then we could also do one here to kind of drive like a heart line. Maybe right there. Let's just see where price touched multiple times. Let's just do that, and let's see what it looks like on the smaller time frames. Weekly. You guys see, like, I don't put a lot of thought into this. Like, a lot of y'all overthink completely what we're doing. See, like, I could adjust this, but remember, this is higher time frames. This is why I don't realistically use trend lines, because I'll constantly be adjusting this to my liking. It's not how the market feels about it. Going down to the daily, looks good, and then down to the 4 hour. Sorry. All right. Looks good. We know that we are trending definitely in an upward direction, bullish, and we can do another since on the 4 hour. Let's just do a small trend line. I'm going to do one here. I'll continue it. Say, the reason I'm doing here is because I see these multiple touches. They got the door open. There's jets flying. If y'all can hear that, I apologize. And there. So we're trending up. We have a nice pullback. So what are we looking for? We're looking for where we could enter. We already know we have our zones set in place. So we could be looking for our buys based off these zones. Now, price is on its retracement. We have our little trend line here. So let's do the beautiful switch to the candles and see how price is reacting. Again, you can see how price reacts to these zones. So let's say, all right, price touches the zone and we have our bullish trend line. Let's go to the small time frame and see how prices react to that. You guys know that I look for this right here. Break, hook, and go. Simple, consistent strategy that works almost every single time. Ooh, I did not mean to put that right there. There we go. So now price is on a retracement, so you're not going to necessarily see this type of break, hook, and go. On the retracement side, what you look for is the bullish structures. You can have your double bottoms, your triple bottoms, your a lot of people like to call it the evening star or the rising star, where you got the doji and stuff like that. I don't really care about stuff like that. I have my zones. I have my trend line set in play. If I see on the smaller time frame, let's go to the 5-minute time frame, that price is respecting this area, then I'm going to put in my buy. We'll come back to this Thursday. So 40 pip stop. We are at 2013. So let's go to point. Now price could blast us out. It's okay. But let's go to the daily real quick. Ooh, no, too high. Why am I looking for this large of a buy right here? Because I automatically know we just created a new high. Price always so we can just do this. So what are we looking for? Let's see just the risk to reward on this. You see this, right? 40 pip stop from 2014 to 2148. Count the pips on that. What's that? I don't know if that's right. It says 13,000 pips. Be a crazy trade. That'd be a life-changing trade right there. Going down to the smaller time frame. Again, what I look for is stability on that zone. Support. We see prices kind of looking good. Looking great. Price looks well enough to where it's holding the support. What price could do is just point. That's okay. Again, so let me explain this real quick, and then I won't take a lot any more of y'all's time. In between these zones, as a swing trader, I look for a continuation. So continuation, continuation, continuation. Now, in between these zones right here, I have the heart line. I just call it the heart line because it's like a heart monitor. Back and forth, back and forth, back and forth. This is for you intraday traders and scalpers. The swing traders look off the levels. The intraday and scalpers, you're looking for a trade. Now, I'm saying if current price is in that area, you would look for either a continuation or a small retracement. You guys see, we're already 10 pips right there on that. But so in between zones, again, you have the heart line. I look for retracements or continuation. So let's see. See, like if you were an intraday trader, now we're on the 5-minute time frame. You're looking for retracements or continuations. You could, and remember, intraday trader, you're just looking for a quick in and out. So if you were to get right here, if you're looking for a continuation, you see that this bearish momentum is coming up from 2020 to 2016. That's 40 pips. Great trade for the day. All right. See, I would not necessarily catch this trade because I do not trade in the heart line, and especially when you see this right here, like you see this chaos right here, where realistically price comes down, back up, and then boom. What this is realistically is almost a break hook and go to the downside in a bearish momentum, but you're counter trend trading against that bullish momentum. So I'm not looking necessarily, I look for sales at this huge, when I seen the price do this, and I can go back and I can show you all my trades on that. But I'm looking for now a continuation to the buy and test the new highs, and we have that continuation to look like this right here and just climb that ladder. Unless we have pure catastrophe and gold just tank, don't see that happening regardless of how much news comes out. It's just not realistic because we automatically have that huge gold push. So we're going to see a pretty big continuation there. But guys, I'm going to go ahead and end this, and I will be back Thursday. We will go over some more. Please message me on Instagram or in the chat, whatever it is, if you guys would like to would like for me to talk about anything on these lives, because I need suggestions for the content. If not, I just keep my consistency and what I'm doing. Not yet. Brandon, can we enter to that operation? That is up to you. That is completely up to you. I'm just showing my personal analysis on what I see gold doing. What you do is completely on you. Completely. But that is what I see. I love y'all. Let me do this. I love y'all. I hope y'all have a wonderful trading week. I hope if you guys are watching this recap to remember what I said, that in times of chaos, you want peace. So withdraw from the markets and just watch it. Watch how price reacts, especially on fundamental areas. Obviously, I see gold reaching new highs. I've been saying this for the last 3 months. It went out absolutely to a T, and we look for continuations. Again, I hope y'all have a wonderful week. I love y'all. I will see y'all Thursday.